Hello traders, Gary Wagner here, just about 9:30 in Honolulu, 3:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 19th of June 2015, and this is Trending Markets. Interesting development this week in the marketplace. In fact, when I look at the markets that we follow, everything is in red but the dollar only up nominally on the day. However, when we look at the week's activity, we can certainly see we had a dramatic down week and a continuation. This is our third week in a row that we have seen the dollar track lower. Euro dollar, in essence, trading unchanged on the day. However, when we look at our weekly candle, you can see that just like the dollar has had 3 consecutive down weeks, we see the euro has had the opposite, or 3 weeks in a row in which we have seen this market move to a new high compared to the previous week. Considering the current debt crisis with Greece, the repayment which is due at the end of this month to the IMF, and the stalemate between the IMF, the European Union, and Greece, I'm surprised that the euro has held up as well as it had. We're looking at two different charts. They're both daily charts. The one on the left is a standard candlestick chart. One on the right is a Japanese average chart. Both have been aligned. Both have our current Elliott wave count. Now, my sense has been that we should see some underlying weakness in the euro dollar. The way that we are currently looking at this market is when this market hit this top of around just above 114 right in here, that concluded a major fourth, a C wave, as well as a fifth wave. You can see how they line up on both sides, which brings me to one observation. I did get an email from one of our subscribers, and that subscriber asked about using an Elliott wave count in conjunction with MACD or stochastics. And although you'll see those line up, I found that when we analyze them with a Japanese average chart, what you'll see is an uncanny set of pivot points that will definitely occur as those waves move from one wave to the other. So in this instance, we've got wave 3 and wave 4. You can see that it goes right here, a pivot point from green to red. We get a solid red move down, and when we do, that concludes this fifth wave right here, which compares to this move here in our standard candlestick format. But you'll also notice how clear the actual pivot is, that we go directly to green, which is when our count begins a ABC corrective period, which looks something like this: our large A, large B, and large C. You can further subdivide this into its subcount. So for example, when we look at this corrective B wave, we can look at that as an ABC. And then when we look at this long C wave, we subdivide that into a 1, 2, 3, 4, and 5. And interestingly enough, we have color coding, or the Japanese average, line up with that. Now, based upon this, as I said, we concluded 4, so we should be going into some sort of a major fifth. Now realize we are in essence a bear count. This last move up was a counter trend. So the way that I look at it is we had the beginning of 1, this being a wave 2. However, any kind of move above this negates that as being our wave 2, which is why there's no formal count there. But we could see this break as a 1, 2, and then the third wave, of course, would take us below this recent low at 108. So you'd get a 1, 2, 3, fourth, and a final fifth wave down. I believe that we will be seeing lower pricing in the euro. However, up to this point, we have not seen the euro break. However, I certainly believe we could see that break begin next week. Now, when we look at the dollar index and look at our same current Elliott wave count, of course, we have the opposite mirror image, in that we are currently in a bull count in the market. Wave 3, wave 4, our wave 5 here. This wave 5 can, of course, be subdivided into 1, 2, 3, 4 along fifth wave. From there, we go into our correction. Our correction is the opposite of the euro. So a corrective action would be lower pricing, and the way that we're looking at our current count is our large A, B, and then a concluding C as it hits its bottom. So when we compare our euro to the US dollar, both in Japanese average format with a Elliott wave count, we can absolutely see they're opposite and mirror images of each other. And to put the current Elliott wave count, both the euro and the dollar, into perspective, we've really compressed it so you can really see the big picture, beginning with our wave 1 to 2, 2 to 3, and that's what takes us to this top here, completion of 4, back about mid-May. And what we have seen in terms of activity over this last month has been really the beginning or formation of a 5th wave. That's going to be an impulse wave, and should it unfold this way, we will see the 5th wave come and make a high above 100 on the dollar index. Traders, as you know, we launched the trending market supplement to the gold forecast this week, and the primary rationale or reason behind it is to incorporate some markets so that we can look for dynamic opportunities, pivot points, and moves that will be not only dynamic but sustaining and be omnidirectional. In other words, rather than a sideways narrow range, we get a breakout either to the upside or downside. I think we'll see an upside breakout in the dollar index, a downside breakout in the euro, and that is the market we're going to identify and look to profit from next week. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another Trending Markets. Bye-bye.